The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Wednesday, Friday, 11 o'clock till noon. And of course this week I also did some filling in for Larry Pesavento. I did Monday, Wednesday, and Thursday, I think. Yeah, and Thursday. So I've been here a lot this week. Now, let's go. First of all, thank you, Tom and Steve, for a great lead into this show. Always fabulous to hear them at the 10 o'clock show together. Steve Rhodes, of course, kicks off the shows at 9 o'clock. Terrific show, as always. And straight off this, you get Nico DeHaan on your health. I mean, living a primal lifestyle. That's really important. Terrific show there. Dave White comes in at 3 o'clock, and of course Dave is our tech guru, and just always great to hear the information that he elucidates on. And then 2 to 5, 2 to 4, 4 o'clock till 6 o'clock, Tom O'Brien wraps up the week, and he will also be looking out towards what he sees for the coming week. So let's look at the Dow. The jobs report came out this morning. I don't even remember what the number was. Whatever the number was, the market didn't like it. Most importantly, as I said to subscribers this morning and yesterday, got to be somewhat careful here, because we've got let me just go through the numbers. The Dow's down 131 at 13,075. The S&P's down 16 at 1374. The comp index is down 49 at 2974. Now that's interesting. Gold is up 60 cents at 1635, and silver is at a little bit of a turnaround. It's up 17 cents. Oh, we'll check that out just now, because it's at 31.80. I got to check it out now. I can't wait. Yesterday, when I was doing Larry's show, I said by midnight on the 5th. Was it midnight on the 5th? It should hit, let's see, SIK. Yeah, I'm going to the K contract, even though probably most people are not trading the K contract. That is May. But I did it on this particular contract. I said that there should be before midnight on the 4th, we should be testing the left side low bar of 29.925. What did we go to today? We went, overnight, we went to 29.88. We broke it, 29.88, 29.92. We broke it by 5 cents, and now the silver contract is bouncing. Isn't that fascinating? The stochastic started to turn around. The MACD, look at this. This is called the ChapmanWave inside wedge. ChapmanWave inside wedge. I was asked, actually, how did I get that number? That's because of the way I look at the left side, right side price time match. On my CD introducing the ChapmanWave methodology, I go into great detail with this particular arch formation or the cup formation that leads to the inside wedge. Okay, so we've got that, and now let's continue. I'd also like to look at, I've been a little concerned about high-grade copper. So high-grade copper is right now, the June contract is trading down at 3.70, down 0.02. So now this is going to be very interesting, because copper is still on the weekly chart holding above the 3.669 200 period exponential moving average. Does have technicals. MACD's just about to turn negative, but it hasn't. The stochastic's way down 42% on the weekly. That to me is just a heads up to say, hey, you got to be careful. You're very selective. So for my opening call, that's my service that comes out every day, starting at about 6:30 in the morning. I start sending my charts to the site, to TFNN site, for the opening call. And in that, I said to subscribers, you've got to be careful. So we are very selectively long. We've got core positions, which we're holding. Funnily enough, I'm not going to talk about it because the day's young, and I don't want to give it the voodoo, the hex. Holding nicely, let's put it that way. We've got a couple of positions. Now, the other thing is this. On the short side, this is going to be a very interesting, a very fascinating period. Why? Because on the short side, you are starting to see stocks that were fantastic winners right up until the past couple of days to a few weeks ago, and we will look at a couple of those charts. If someone in the den is kind enough just to shoot over a couple of names that have had really sharp declines, let's see what I've got here in my ChapmanWave notation. That'll be great. Meantime, high-grade copper is a little bit of a worry, but until it breaks under the 3.5, the low of April, 3.57, until it closes under there, I'm going to watch that 200-period exponential moving average. Now, this is really important. TLT, thank you. Lorna, Apple, we got Nancy and Lorna, and Apple, Netflix. We'll look at those. TLT is up only 38 cents. That's 117.60. Bonds, USM, are up 18 to 19 30 seconds in leg D after a ChapmanWave instant restart. But they're not soaring yet. I have to say yet because, hey, we're not even 2 hours into the session. The day is young. Anything can happen between now and 4 o'clock. But that is impressive. Impressive in the sense that the internal market strength is saying, hey, money is not going from bonds to stocks or stocks to bonds. There's something else going on. Bonds are holding really well. Look at that weekly chart. That's saying got to be a little bit careful here. And that final thing that I want to look at, I'm not going to look at crude oil right now. I'm going to look at the VIX. The volatility index is up $1.10 at 18.66. And what I'd said is anything over the 1820s, maybe 1840, and the market will be under pressure, under selling pressure. Now, I'm going to look at the bigger picture. Let's just do this for fun, just as we're looking, as I'm going to go to our first caller, because I do want to take call. Price line right now is down 9 at 740. It made a peak E-top, tried a double top at the 774.96 level back in April. Well, it tried on April the 30th to get to that level, but it only went to 772.35. That means I'm still looking for leg D up in the weekly chart just above that. And then we've got to be careful with price line. Netflix, NFLX. Netflix. Wait, you remember I was on air. We discussed that I was getting a potential hat-trick top peak E at 304.79 back in July of 2011. Let me just go to the weekly chart. See what, yep, it was a peak E in the weekly, about to break down from that beautiful up channel support, and it finally did break down. It's gone under the 95.33 low of July of 2010. It's gone down to the 62.90 area, tried to rally, went to a peak B, and now it's making the dreaded H pattern, which says liable to test 62.90. I can even see it going quite a bit lower than that. And then the other one that we were talking about, Apple with its round numbers, 644.00 high on the 10th, down to the 555 round number low, runs up to the 618.00 round number retracement peak A minus. And now it's coming down, and it's going right back into the gap. It's going right through the gap once again. Technicals are very poor at this particular point. Weekly chart is still not giving me a sell mode, just a sell signal. And I will only get the sell mode if I see that the fast-moving average is decisively piercing the slow-moving average in the MACD, and it isn't. And the stochastic's only now gone to 77%. I do believe we're in a sell mode in the we're in a sell mode in the daily. We'll see where we close for today at 4 o'clock. But certainly, if it closes decisively under the 9-period exponential moving average, then the 9-period differential in the MACD should pull back. So we're going to our first caller. We're going to go to Michael in New York. Hi, Michael. How are you?
Good. Basil, I'm looking at Mercado Libre, MELI, and my question is, in the weekly, I have a peak C, but the stochastic and the MACD are headed down. So they're reporting earnings next week. I think we'll get a peak D, a leg D in the weekly, but I can't, tell. How would you play something like this where you have...
All right, let me just do something. I used to have all these notated. I don't know what's happened. My software is, not my software, but the package is taking me to something else, and I just have to redo a whole series of charts. So 101.84, 101. Ha! This is what I'm going to do. Do you see I don't do this very often, but if you're looking at the stochastic and the MACD, folks, we're looking MELI. MELI is the symbol, 92.92 right now, down to $1.12. It's Mercado Libre Inc. And right now, what I'm looking at is from the low bar in the weekly chart back in week of October the 7th. 48.30 was the low. It runs up to peak A at 89.99, 11.11.11, pulls back for 2 bars, breaks that and goes to leg B on the week of the 9th of December, pulls back, holds just underneath the 9-period moving average, then crosses the 9-period moving average, takes out the 95.48 high, starts leg C. Now, when I look at a chart like this, I study it very carefully to see where the stochastic and the MACD are. Do you see the 2 bars with a high the week of the 17th of February? 101.84 was the high. The very next bar was 101.88. That's 4 cents difference. And then the following bar was a new recovery high at 104.50. What I do automatically, and you might remember this, is I turn that, because it's only 4 cents, everything about it together with the stochastic and MACD said to be safe, even though it's fractionally higher, it has all the prerequisites for what I call the phantom wave, ChapmanWave phantom wave, peak C. There are special conditions where I use it, and it's because I want to be as conservative as possible for the potential for a peak D. For instance, you're at C and you're waiting for D, but if you look very closely at the 2 bars of the week of the 17th of February and the week of the 24th, look at the way the MACD, the stochastic was pulling back. So I have every legitimate use in my technique to say I've probably made a peak D in MELI, in the Chapman wave. I would then put a down arrow. I probably would start at a plus sign until the MACD confirmed by crossing negatively. And now what you've done is, the whole thing about this is preparation. In the preparation, you want to say to yourself, I want to be very conservative in this particular waveform. I cannot change the rules, but there is one rule that says if you have 2 consecutive highs, or just fractionally higher, and the 3rd bar goes even higher still, and everything about the technique that you're looking at, in this case the MACD and the stochastic and the 9-period moving average, says be careful because it could be pulling back. Not only that, you also had in the daily chart, let me just quickly do this, A, B, C, D, E, brand new. Let me just there's a break coming up. Let me just finish the notation, and then I'll be right back with you, because it's a great question, and you can understand that what I'm looking at is the safety of you. If you want to use a phantom peak, you in your mind you say, I've used a phantom peak, but every other thing says it should be pulling back. I must be careful. So hold on, I'll be right with you. We're looking at MELI, Mercado Libre, and I'll be back with Michael from New York straight after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the Money Game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the Money Game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, and yes. So I just wanted to find in my CD introducing the ChapmanWave methodology a discussion on phantom peaks. So I've just found it. But in the meantime, let's go back to the question. I also had a question in the den from Art about AEM. Will it fill the gap? Great questions. So we're going to go back to Michael, and we're looking at MELI. So they are basically venture capital in media. Is that correct?
No, Mercado Libre is the eBay of South America.
Okay, yeah, okay, good. So it's eBay. All right, well, that's kind of, that's not quite what was said when I Googled it. So here we are. We're looking at 92.63 down $1.33. It's had the spectacular move from 86.86 in the daily on the 23rd of April all the way to 101.35 just a few days later, the 1st of May, and now it's pulling back in what could be called in the ChapmanWave an Eiffel Tower. It looks like the uppercase letter A, you know, and it even is an A, leg A, peak A actually, and that can pull back. If this thing stops at 90.6 above 90.69 in the next 2 days, and then crosses over to 94.80 to 95, the weekly chart will have stopped. At that point, the MACD in the weekly chart should start to improve, and the stochastic should start to flatten out, and it hasn't done that. So at this particular point, the chart is negative technically on a weekly basis, but not on price, because the price is still holding above the 86 low. That's number one. Number two, I just want to give the big picture. In the big picture, I've tried different ways of counting this. A, B, C, D, E, F, G, A. I can't get a G, A, so it has to be brand new B in the monthly chart. So far, the monthly chart says, hey, this is really good action, and it'll only change. I'm not even sure what I'm going to be able to count it because I haven't got an instant restart because it broke down too low after the low of November 2010, 5660. So this is what I'm going to say to you. In terms of the upside, I would have to wait. I would not be doing any buying yet because I've got that phantom peak, and I have to believe everything about it says that the rallies have the wick, this upside down hammer candle. So it has the wick at the top, and each time it closes at the bottom. That's usually bullish in the sense that it says that's a pattern that you've got to look for because intra-bar it's going to try to rally, but closing price is always negative for the week. So that says to me, the weight of evidence says that the candle of last week with the low of 86.86 cannot be ruled out as being tested. Number one. Number two is on a daily basis. Now I'm going to go to the shorter term. It went close to the 200 period exponential moving average, which it did once before back in January the 4th, 77.48, and then had a spectacular run to the high of 104.50. It's made a right shoulder peak D. It actually had a whole new run in a buy mode with a failure just underneath at 102.96. That was on the 27th of March. And now it's making trough A, trough B, C, D, E. Good rally. Another lower high. So it's making a series of lower lows and lower highs. I wouldn't be touching this just yet. But I tell you what I would look for, because this pattern is a pattern we've seen before. If it fails to break in the next 2 weeks, certainly if it fails to break under 90, that is a close under 90, then there's a good chance that it's going to make another series of attempts to go higher, and that's the one that you've got to be careful that doesn't fail and makes another series of lower lows. So your question is, you're waiting for the weekly. I'm saying I'm waiting for the monthly, because at this particular point, the technicals are still very good in the monthly. So the monthly says 88. If it closes under 88 to 87 in May, I just have to say, be careful. I don't know what the wave count is. It looks to me like it could abort a peak B. It's unusual for a monthly to do that. But there's a real good chance that if it stabilizes over the coming weeks, because it's had a spectacular couple of years, if it can stabilize, this is a stock to look at for the long side. Right now, I'd just be cautious, just like I am with the general market. So I hope that helps you.
Yes, very much. Thank you.
Thank you very much for calling. Now let's go to AEM, which is Agnico Eagle. Question in the den. Will this gap be filled? So AEM is trading at 38.58, up 18 cents. In the monthly chart, it's had 1, 2, 3 spectacular rallies to peak D. The last one was at 88.20, and it tested the 200 period exponential moving average of 33.24. I'll be back. We'll talk about AEM. I'll talk about gold, talk about a number of things, but I do want to get your calls at 877-927-6648. Oh, and I wanted to talk about hats and the 1%ers. I'll be back.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at TFNN.com. Sign up today, because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians. Now this is going to be very interesting. Why? Because when I look at, for subscribers, what we look at, there are 5 segments within the one chart that I call the overview _ market today. And there I look at the different pictures, different time frames. I look at the overall market and what we're looking at. And what I said was, we've got to watch the volatility index. And look, the volatility index is now spiking to up 138 at 18.94. And that if any time next week, if there was a sharp down close, we've got to watch out next week, because if the volatility index goes into the mid-20s, or it just goes into the 20s, then you will probably have a problem with any of the indices running, and that's a negative. Now, here's another thing. The short-term trading index, the TRIN that Richard Arms developed, just is a great indicator, although I must say I use it differently to the way he uses it. So I really can't speak to his usage of it, but the development of it I love. And it is only at 1.25 instead of every other time there was nervousness. It went to 1.91, 3.15, 2.42, 2.37. This is a big negative for me. Why? Because it's disbelief. It's saying, hey, you know, we've been here before, market could turn around. So it will turn into a tremendous, it can only turn into a tremendous positive if by and I don't know what's going to make it do that, but if by 2:20 to 3:15 this afternoon, there's a sudden stabilization, the volatility index, which is actually in leg F right now, it could have started a brand new leg B, but let's call it F. If it suddenly starts to pull back and the Dow and the S&P start to push much higher, there's this late afternoon turnaround, almost like a selling climax on the day, and all of a sudden you start to see the Dow, instead of minus 150, goes to a minus 127, minus 119, minus 150, minus 109, minus 89, minus 93. Then it comes back again to minus 105, and then all of a sudden there's this burst of energy, I'm not sure what can do it, into the close. If instead, and then you should see the trend start to come down and the volatility index should drop. But you've already broken the up channel support line in the Dow. You've gone from a peak D, and I have no choice but to put a down arrow in the S&P, the peak D. That says to me, this is somewhat more serious. It's not telling me yet how far the decline will be. It's just saying, hey, this is serious. You got to take it seriously, because that trend is just ignoring it, and it gives the room trend to go to the 1.90 to 2.20 area. Now it's at 1.23. Later, if there's even more selling. So those are the things that I would look for. Now let's go quickly back to the AEM chart. Agnico Eagle is 38.61, up 21 cents in a down day. A day where the GLD is at this particular point almost unchanged. So you might be seeing a flight to safety of golds at this particular point, or maybe gold stocks. But more importantly, the question was, will it fill the gap, which is between 37.99 and the low of the 26th of April at 35.30, the high, that is, of 35.64. Why did I write that? Oh, wrong one. 35.90, the high of the 26th of April, just the day before the gap. Yeah, this is going to be interesting, and I'll tell you why. The action of Agnico Eagle, I was really looking at this in great detail the other day. The spike that you had the other day, back in February, the week of the 17th, when it went from 31.42 to a sudden spike over the next week to 38.02, then failed, but it didn't take out the low bar, the low of 31.42. So what does that say? 31.42. Okay, it says that there can be another rally, because there's a little arch formation, remember the dreaded H? And that rally should take it to, and it can go just above the previous high, which in this case is 38.02. But if it goes much higher, watch the stochastic and MACD. Well, lo and behold, MACD's been rallying beautifully. Stochastic's made a much higher low in the April low than it did back in January and February. So that's a positive, but it is in the group that has been very weak. That is in the gold-silver area. So now let's look at the monthly chart. And what's happened is that from the buy signal back in May of 2005 from 1080, it ran all the way to a peak D, 4 peaks high. Remember, that's the rule of the ChapmanWave, is to try to get to a peak D in a buy mode. It can go higher, but D is what you're really striving for. That's when it can and often does have the deepest pullback. So in May of 2006, it pulls back, goes to the 9-period moving average, stops at 25.49. June starts another rally, goes to peak D again. You know, how many times have you seen peak Ds in the ChapmanWave? It is uncanny how many times it happens. Now look at the monthly chart. It goes to peak D in March of 2008, 83.45, plunges down to where? Well, when it started the rally back in May of 2005, it came off the 200-period exponential moving average. I'll dot this, that purplish line. Lo and behold, it hits it exactly. In October of 2008 at 20.87, starts another buy mode to a slightly higher high, but it doesn't close above the 83.45 high of March of 2008. Instead, at 88.20 in December of 2010, goes to 88.20, but closes the month at 76.70. Then it goes under the 9-period exponential moving average, and it plunges. Where does it go to? Well, looky here. It goes right to the 200 period exponential moving average. 1, 2, 3, 4, 5, 6 months, and it hasn't closed below. So that says to me, this is an unusual stock. Something's going on in the stock. I don't know what it is. Could be takeover rumors. It could be anything. It could be successfully just producing much better results. And now look what's happened. You've got 42.52 as a potential target if in the next week AEM is able to climb above, oh, that shouldn't be a B minus, that should just be a B, above the peak B right here. Now let's get to the question of, but first, will it fill the gap? 40.37 was the high on the 1st of May. The candle that was formed yesterday is a candle with a wick at 37 round number below the 9-period moving average that says if it's able to close above the high of the previous candle, that's 38.91, preferably within 1 day, but within 2 days, that's very positive, and then it should tackle the most important next candle on the left. Well, of course, that's the doji candle of the second, the 39.69 level, and if it is able to close above that, it should surpass the previous peak, which would be peak B at 40.37. Before that, we've got a 120-minute chart that's making the pattern, that falling axe pattern, and the arch formation. So far, we have to consider that this is in all, an island reversal to the upside. Will it be filled? And I'll tell you now that at this particular point, all I can say is that the stochastic and MACD suggest that it will be filled. The question is when. So I'm going to tell you this, that on an intraday basis, if AEM breaks under 37, it's at 38.48. If it closes under 38, either today or Monday, without getting into the bar of the 120-minute bar into, I'd say the 38.90 to 39.10 area, then it's going to make a dreaded H formation, and it's going to go back, and the level I'd be looking at would be around about 36.70. So my parameters are, if it closes under any bar in this 120-minute bar, if it closes under 38, expect it to pull back, and I would suggest that it's going to probably test 37.20 to the 37 low that was made at 13.30, 1:30 on the 3rd. That's yesterday. And if it closes under that, it'll go deeper down. But the strength of it so far says, it might not fill the 35.90 high of the 26th of April until it tries one more time to break above. Now, this is the fascinating thing. In this pattern, there's a ChapmanWave falling axe formation. You see the declining wedge? If by Monday afternoon it's able to close above 39.39, I suggest to you this thing has a chance of retesting the high of 40.37, and then making legs C up in the daily. Those are the parameters. Now let's just look at the weekly chart. Weekly chart says, second leg A up, they have a tendency to fail. It's in a doji candle right now. If any time in the next 3 days, Monday, Tuesday, Wednesday, it's able to close above 40.37, that's very positive action, and it would probably try to head for the somewhere around the 41.80 to 42.30 area. So, and then it says failure pattern would be in the next 3 days if it closes under 35.59. So what would you do if you were in it right now? If you're in, I'd say I just put in a stop in some part of my position into, 37.67, 37.66. I'd be out of the trade, at least part of the trade, thinking it's going to pull back more. But if it holds today, I would make the middle of that candle of the wick. 37.80 on a small position would be a stop. If you're looking to get in, I would highly recommend that you have a little patience here. But if you are determined to get in, then the level to watch would be if later today it gets to 38.74, you could nibble on a very small position, a really small position with a 1-point stop, because in this particular market, there's vulnerability all over the show. So I suspect it's going to make leg C if it can get into the 39.50s. but I can't tell you anything other than that. It's just the day is just too young for me. I need to see the full bar before I can make a daily recommendation. Okay, now let's do a couple of other things. The dollar, DXY. The dollar is rallying. It is at 79.38. The weekly chart still looks quite pathetic. The monthly chart is holding the 9-period moving average, and that's good. Now, what would make a difference here? Remember I showed you the UUP and the GLD charts yesterday, and the weekly charts. I don't know if I can go to them now, but I can certainly go to the weekly chart just by looking at it like this. There's a potential, and I'd mentioned this to subscribers, and I drew this in. There's a potential for a cup and ladle formation. But it's also a potential inverted head and shoulders, because there's inverted, meaning this whole side to the 75.53 low of November of 2010, then the rebound to the 200-period moving average in the 81 area, the failure coming back down to 72.70, making a big cup formation, having defied the dreaded H's that were inside there. That says that the peak E at 81.78 in a left side, right side price time match has a pullback coming, and if that pullback breaks more than 50% of the distance between 72.70 to 81.78, you can expect it to come down a lot deeper. So far it's holding, and the same in miniature, the fractal that was made over here, the larger one, where you made a cup, within it you made these little arches that held. So you're making a cup, and there are arches that are holding again. That says that if the dollar's able to get to 80.30, I would say 81.20 by Monday afternoon, Tuesday, because the market's still pulling back very sharply, you will see the stochastic start to improve in the weekly chart, and the MACD could start to turn up. A lot's going to depend on how it breaks the resistance line, and it should do that. It even should do it today. The resistance line from the peak A minus top on the 5th at 80.18, and then all the series of candles with the wicks over there, and yesterday and today's candle 79.42 was the high. So the dollar is definitely improving. What it does in the next 2 days is going to be very important. I would say it's way more important to be looking at the volatility index. Why? Whoops, it's even pushed higher as we're speaking. It's up $1.59, 19.15. Why? Because the weekly chart, let me just go to the monthly chart, because I had a question about this in an email 2 days ago. I forgot to talk about it. And that was how that monthly chart was indicating that it could go a few months into that rectangle formation. What would happen if it spiked out of it? And this is exactly the answer to the question. It went down to 15.02. Impossible. I'm reading the wrong thing. 15.02. Oh, that's the rectangle. There you go. The low of 13.66 was the low 3 months ago, back in March. And what's happening is it's slowly creeping up. And that's the kind of pattern we've seen previously, that it dips into the rectangle formation underneath 19, I think it is, and then it starts to move higher. So, question in the debt. So this is what I'm looking at. If either today or next week the VIX closes above 20.70, that's the 9-period moving average in the monthly chart, that'll say be careful, but of course we have to wait the full month. So let's do the weekly chart. The weekly chart says 23.59 is the level. Close above that, this market's going down not just a few hundred points, but a lot of 100 points, because that's the kind of selling pressure we will see. So if there's a reversal in the VIX over the next few days, going back to under 18, that'll be a positive. I'll be back. We'll look at the euro in a moment. Basil Chapman, 877-927-6648. Hey, still time to take your calls.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi everyone, Basil Chapman. I had a couple of questions. Dow's down 170, S&P's down 21.5. What I did for my opening call subscribers this morning, and I will be giving an update at 12:30. Very rare that I give an update, but I will give an update at 12:30 today. So refresh my site when you go there. What is important is that we added to a particular short position, and we wanted to pop up between before, I think I said 10 past 11 this morning, and if it got to a particular level we wanted to short, we were able to get that. One of the reasons is I wanted to stick with the stocks that are holding well, that are acting well as the potential longs, and the stocks that have had huge moves and are need time to consolidate and are looking in the monthly, weekly, and daily charts looking very poor. This is perhaps one that is, so we added to our core position that we've been short in. So I'm not sure if it'll work, but that's it. And there's another one we might add to as a fresh one coming in at 12:30. I'll have to check that out. So that's the positions. But more importantly, a quick question was the Euro, EUR, USD. That is the Euro dollar currency pair. Yeah, that's pulling back very sharply. The weekly hasn't broken, but I can tell you this, if the euro breaks 1.297 intra-week, even intra-week, that's going to turn the stochastic, the MACD down. So it hasn't done that yet. So I'm going to be watching this closely. Why? Because if, in fact, there is a pullback, but intra-week it dips underneath 1.297, and then by the end of the week it closes sharply higher, that will keep that fast-moving average of the MACD steady, and that'll say, aha, rectangle trading is probably going to be the issue. The JJC, which is the copper that I had spoken about, mentioned for my subscribers that we were looking at to see how it behaves, that together with copper and a couple of copper stocks is down 37 cents at 47.39. This is the iPath AIG Copper Trust fund, so in ETF. That's holding. The weekly chart had a great week last week. It's giving it back. 46.81 will be the first level. If that breaks by Wednesday, this coming Wednesday, very negative. If the week closes under 45.97, we will definitely be in for a pretty good consolidation all around in all the markets, because that's an economic statement as I see it. Now, there was one other question. Oh, Cat in the Den was mentioned yesterday. I think it was on Larry's show. I mentioned Caterpillar. I talked about the pattern that I call the Groucho Marx eyebrows in the monthly, made 116.55 high back in 2011, and then just went under it at 116.95. 116.55. Wait a minute, it went higher. 116.95. That's the characteristic of this, that it gets real close or just fractionally higher or fractionally lower. That's a V-shaped double top, so you've got to be real careful, because Caterpillar is a very important Dow stock, and it really, I spoke about it as a commodity stock, kind of like a commodity stock. 96.98 is the SM, the simple moving average support. So we're going to watch that real closely in Caterpillar. Now, one other question I had is, bonds, TLT. The TLT is rallying right now. If it closes above 118.41, that's the high of the 23rd, it has to close above it. That says I can actually call that new leg, if it does it in the next day or so without making a peak. I'm going to call that leg C/F or F/C, expecting that it could even go to a leg D. And that says that the weekly chart, if it's this week, if it's not this week, it doesn't go above 118.41, but next week, that'll be leg C in the weekly chart. Now, it's had a habit of going to peak C and then failing. But holding well like this says be careful in the market. So, folks, be very cautious. I'm still very selective. I still want to look at a couple of long positions, but we are adding to the short positions because that's the direction. Got to treat this with respect. Very sharp pullback from peak D in the Dow and the S&P and the IWM, the Qs as well. Didn't even get that far. Be careful. And I'll be back on Monday. My service is the opening call. Go to the front page, check it out. 2 weeks free. I'll be back on Monday. Stay tuned for Nico, then Dave, and then Tom.